Hello, everyone. Welcome to Agoric's Pillar Series for April. I'm Roland Grouse, Product Manager at Agoric, and this month we are going to talk about Run, the stable local currency for Agoric. So we've had a couple talks recently about the economy, but today we really want to focus on the stable currency Run. So we'll take you through a few developments, some background around Run, and then we're really excited to bring in our economist, Bill, to talk a little bit more in detail about how we've thought about the design for Run itself. So as we're going through this, as always, please put questions in the YouTube comment chat or ask them in Discord later if you're watching this asynchronously, and we'll be happy to address them live if we can, or talk to you separately if we need to. All right. So just as a quick recap in the Agoric economy, we have two protocol native tokens. We have the build token, which is the staking token that we use to secure the network. It's used for voting and governance. It's used to collect rewards for securing both the network and the economy. So that is the build token BLD. And then separately, we also have the run token, RUN, which is the currency that we use to pay for goods, services, and execution fees. So if you're used to other blockchains that have a gas model, RUN is our token that we use to pay gas fees. Additionally, that's what we expect third-party developers who are building on top of our chain to accept as a primary denomination for what they're selling. All right, so digging into Run a little bit more. Run is pegged to the US dollar and it's minted at the Treasury. We'll talk about that a little bit more. It's backed by on-chain collateral and it's IBC connected. So this is an important point. We call it our stable local currency because it is core to the Agoric ecosystem, but it's not limited to the Agoric ecosystem. Because Agoric in general is IBC connected, Run will be able to move across chains that support IBC, which right now is all Cosmos chains, but that will grow as IBC gains adoption. And you're already starting to see discussions around that happening. As I mentioned, the uses of Run are paying for execution fees, and then also as a common denomination that if you're running an application, you're selling goods or services, you are doing anything in the economy, you can easily accept Run as a default pricing mechanism. All right, so with that, I'm going to bring Bill on, and those of you who've been in the community for a while, you know Bill. He gave actually, I think, maybe the first Pillar Series talk several months ago now. But since our community has grown quite a bit, figure I'll ask Bill to introduce himself. So, Bill, why don't you do that quickly?
Sure. Yeah, my name is Bill Tulla. I'm the economist at Agoric. I'm one of the co-founders. Got into this space many years ago, working on smart contracts even before blockchains existed. So real excited about what we're able to build now that blockchains do exist.
Great. So I guess for the purpose of the talk today, and there's a lot we could talk about here, but people that have been watching the space have seen a number of stablecoins launch, and actually, for those of you that haven't seen it, you really should watch Bill's stablecoin talk. And I'm forgetting when that was, maybe back in November, several months ago. You should watch that because Bill does a great job breaking down different kinds of stablecoins and their dynamics and how to think about them. But even since that talk, there have been a number of new experiments of stablecoins in Ethereum and in other places. So I thought it might be a good opportunity for us to talk about how did we think about our stable local currency design.
Sure. I mean, first of all, for us, the main design focus was how can we enable a better DeFi experience? So our focus has really been on, what are the enablers of DeFi? And we built that as core to our system. So ERTP protocol makes it easy to create and mint digital assets and trade them on our system. But what we've seen is that stablecoins play a major role in facilitating DeFi. The ability to move in and out of a dollar-denominated asset greatly facilitates certain types of transactions and investments. So that was sort of our initial thinking along this line, to say that then how can we incorporate that into our core protocol? So we designed Run to be really built into part of the core blockchain protocol. It's an app built on top of our system, but it's deeply integrated in with our whole staking environment as well. So that was sort of the initial approach that we took. And then looking at stablecoin design, obviously this place, like everything in DeFi, is just rapidly evolving. There's new designs coming out all the time. So in this, our approach is, fairly conservative, I would say, in the sense that a lot of the algorithmic designs out there are, at least in my mind, are still yet to be proven. So we use something that's been in existence in the real world for a long time, which is to have a collateral-backed stablecoin. And in our case, being a blockchain, this will be crypto-backed, crypto collateral used to back our stablecoin.
Yeah, one way that I like to think about it is that for our core economy and our core protocol token, we want to be building that for resilience. And obviously that doesn't keep other people from experimenting and trying out some of these new designs on their own if they're looking to launch their own stablecoin. But for our goals, we want to make sure that the stablecoin backing the system is built for the long term.
Yeah, that's right. And, people are free. We're a smart contract platform where you're able to build all sorts of applications on our system, including other stable coins. But we think that there's virtue to having it built, a stable currency built natively into our system. First of all, it gives a way to pay fees on our system in a stable currency, but it also allows us to unlock some of the value that's staked on our system. So one of the possibilities that we're exploring now is actually the ability to borrow run against some of your staked capital in the core protocol, which I think is very exciting and novel for what we're doing.
So Ed, that is something that I in particular am extremely excited about. I wanted to go back to one of your other points around paying execution fees in a stable currency. That's something that we talk about internally quite a bit, but would love to hear a little bit more on why that's important, especially if you're used to a system that has execution fees paid in a volatile currency.
Yeah, well, first of all, but it just makes it easy to figure out what your costs are going to be over the long term. So by having you can focus on what's the price of execution rather than what's the asset itself is doing on a day-to-day basis. It also allows you to, if you have an investment asset, you don't necessarily want to be using that to pay daily fees. You'd rather be holding on to that investment asset. So this allows us to separate those two concerns. So if from what you need to just pay fees directly in order to get your transactions processed versus whatever asset you want to be holding as investments.
Right, makes sense. And if you're a US-based business, and in particular, you don't want to have to calculate taxes as well on every single transaction that you do in the system when your currency has changed value over time.
Absolutely.
So one other piece that we've talked about as being important is the integrated AMM in our treasury. So would love to hear your thoughts on how that relates here and where that shows up.
Yeah, so again, it goes back to our goal of trying to really facilitate DeFi on our system, and like a stable currency, we think of a AMM as being an automated market maker as being a core DeFi protocol. So we have built an AMM onto as part of our core system, along with the ability to mint our stable currency. And that gives us several advantages. First of all, it gives us a place for price discovery for the value of the assets on chain, which we think is very important. It helps providing facilitating arbitrage on the system to help keep our currency pegged. It's an easy way to get access to Run. You can just swap a currency swap some other asset for Run. And it also, we can liquidate vaults on the AMM as needed. So we see it giving, just being such a core protocol for really making DeFi run that we've built it in to our system.
Great. And as a last question, it occurs to me that some of our community is potentially less familiar with some of these models. So the idea of having a collateral backing, a volatile collateral backing a stable currency, that's quite familiar to people that have been in the DeFi ecosystem for a while. But maybe it's worth talking through what are the dynamics that cause that peg to maintain, right? If you have a volatile asset backing a stable asset, how does that peg between Run and the US dollar actually work?
Yeah, so our basic model I think of is essentially like a what in the real world banking systems would be called a currency board, and the currency boards basically hold 100% backed of the currency they issue. So in this sense, that they can't overissue, and it's always redeemable for the 100% backing. So off-chain stable coins essentially do this. So something like USDC allows you to deposit dollars in the bank and take out a token worth that dollar, which you can later redeem. The challenge for on-chain is you can't actually put a dollar on-chain. You'd have to put some token of a dollar on-chain. So what you do instead is you take collateral that's priced in terms of dollars. And these are crypto collateral, which you can hold on chain, and then you use the price of the dollar, the price of the collateral in terms of dollars to back whatever currency you issue. And so we use this model where we have 100% backed currency at all time. Given the volatility that you rely on over collateralization, so we have a collateralization ratio that you need to meet in order to mint Run, and there is some risk involved. If the collateral falls dramatically, then your vault can get liquidated.
Right, that makes sense. And one of the core dynamics is that we rely on market participants and market mechanisms to manage that peg. So because you can redeem at effectively, the treasury treats Run as worth $1, and because you can mint at that value and redeem effectively at that value if you have a vault outstanding, those activities over time and the liquidations over time ensure that the market pushes the price and maintains it around $1. Okay, so Bill, and I guess I should mention again, those of you who are interested in this, please do go back and watch Bill's earlier stablecoin presentation, which was really great, and we'll likely do something similar in the future. But Bill, I'm going to let you take your leave here, and got a couple more Run-related topics to go through for folks.
All right, thank you.
Thanks for coming on. All right, and as always, please do drop questions in chat, drop questions in Discord later, and we can address them either live or later on. All right, so we mentioned in our recent community update that the Agoric beta was live, and so this was a huge step for the community. This was, and for Agoric generally, this happened in early April. In the beta, you can test the dynamics of minting Run. So the beta is the first version of our treasury. You can bring some fake collateral in, you can mint Run against it, and you can see what happens as the collateralization ratio changes. And that really will be the core dynamic in the treasury. As beta moves forward, we actually have quite a bit of additional releases coming through that will help users understand this dynamic a bit better. So next steps for the beta we'll be collecting economy reward flows in Run. So Bill mentioned the built-in AMMs. Similar to AMMs that you may be used to, there's fee collection that happens on trades, and that fee collection will happen in Run, which will partly help reward stakers for supporting the economy. And then similarly, the fees on vaults are collected in Run and also go to help support the economy. Beyond that, we're looking to connect to IBC in testnet, which will allow you to actually experience bringing assets from other Cosmos chains over to our vaults, collateralizing, minting Run against them, and hopefully, depending on the testnet availability of other DEXs, actually doing some trades on other chains. So all of that will be coming in the next month or so on testnet, and then we'll also be looking to add bounties for DeFi developers that are looking to build on our beta. So a lot of exciting things coming in the beta, but again, that is an easy way to start interacting with the treasury and with Run as a user. All right, so we're really excited, and we've been following the Gravity DEX team for a while, and they have a big event coming up that actually I think registrations started today and go through April 30th, which is the Gravity DEX competition, trading competition rather. So this is being run by AIB. The Gravity DEX is a decentralized exchange that will launch on the Cosmos Hub. They're targeting summer, I believe, for their mainnet. And Agoric will be one of 10 sponsors of the Gravity DEX trading competition. So if you're interested in starting to understand how DeFi will be coming to Cosmos more generally, you should really check out the Gravity DEX competition here. Sign up today, and the competition itself runs May 4th through May 11th. So it's only a week long, and that will be your opportunity to understand the DEX design. And it actually, Bill and some of our other economists that we work with, we've talked through the design with them, and it's quite interesting. So it's going to be a DEX that isn't something that you're used to trading on. So I definitely encourage you to go check that out. And as an exciting point for Agoric, Run will be part of this Gravity DEX competition. So as of right now, there are 10 assets that have come from other Cosmos-related sponsors, including Agoric. And Run will be the only stable coin. So the rest of them will be volatile. But if you're denominating your trades in dollars, which that's how the prizes will be awarded, then you'll look to denominate in Run as you trade through the competition. So this is great for Agoric in the sense that it's our first exposure. It'll be a broader exposure to the Cosmos community around Run, the ability to use it as a stable coin. It's the first time that we'll be exposing that. And it also emphasizes Run's IBC connectedness, right? So you can come to Agoric, bring collateral, mint Run, and then take it to a chain that is not Agoric if you wish, and trade with it there. So as Run expands, we'll be looking to continue doing things like this. So we're really excited for this Gravity DEX competition. And so I've started to talk through some of this already, or alluding to it at least. But this is important not just from an exposure standpoint for Agoric, but also from an actual economic stability standpoint. So one of the important ways that that a chain maintains its stability is that our AMM, our local AMM, needs to connect to deep liquidity pools that may be on our AMM or maybe elsewhere on other chains. And the Gravity DEX will likely be one of those destinations. There are other DEXs that are launching on Cosmos. There will be DEXs obviously on Ethereum that we can connect to as well over the Gravity Bridge. And so arbitraging between our AMM and those other destinations will be an important focus for us to make sure that our prices remain in line, or rather their prices remain in line with ours for the pairs that are deeper on our chain. So on that note, if you are an arbitrage bot builder, or you're interested in being an arbitrage bot builder, you should come chat with us, because that's something that we'll be looking to very early on start working on, is, you know, arbitraging, for example, between an Atom Run pool on our local AMM versus an Atom Run pool on the Gravity DEX. That's a clear need for us and a clear near-term goal. So we'll be looking to address bounties for that, and definitely excited to talk to anybody that's interested in building it. So I see a few things coming through. I mean, if anyone has questions on that, feel free to ask them now, and I can speak live, but also connect with us in Discord, and we can talk and help you go through some of your designs or answer direct questions as well. All right, so that's our Run presentation. I'll wait for a minute for a couple questions here, and you know, feel free to put them in chat. Actually, I've got a couple, got Keybase and Discord open as well. So there was one question that came in directly to me during the presentation here, which is what are projects that people should be looking to build on beta? And it's a great question. I think the arbitrage bot, things like that are clear needs for us, but we're also looking for core DeFi components. So if you're interested in building a loan protocol, which would accept collateral as supply and allow people to borrow collateral out in a pooled manner, that's something we're really interested in. If you're looking to build a synthetics protocol, a perpetual future exchange, that sort of thing. So we've got a lot of DeFi components that we think will be necessary to build up a healthy ecosystem. And so happy to engage on that more directly. Yeah, Dean says, are bots via IBC? Yes, yes. So obviously a clear priority on our end. Okay, so if no other questions, happy to end here, but appreciate you all tuning in, and we're really excited for the growth of Run.